because of tax refund time.
That's right, but going to the first tax preparer that you might find could end up costing you money in the long run. ABC 2 News investigator Josie Sturman now is here to explain why. Josie?
Well, Kelly, Maryland law now requires tax preparers to register with the state to do business, but scam artists don't always play by the rules, and when we're talking about your money, they really don't care. The Better Business Bureau says tax season is prime time for scams, and because you're handing over all your personal information, how much you make, your social security number, you really have to be careful about who you choose to do your taxes. First important thing, you need to check if they're registered here in Maryland and that they have an IRS PIN number. If they don't, that's a red flag. You got to go somewhere else. And when you find one that appears legit, you need to ask how long they've been in business and specifically how long they've operated in that location. With your taxes, you're looking for a preparer with stability.
One of the things we're always concerned about is when somebody comes in, opens up a storefront 2 months prior to the tax season and then shuts it down right after the tax season. Because if there's any issues on your tax filings, if they're not there, it can't be addressed.
You also need to find out who is physically going to do your taxes. Angie says many companies, the bad ones, operate almost like a factory. You bring in, you give over your information, then it's handed off to somebody in a back room. So you need to make sure whoever is actually doing your taxes has the qualifications they need. That's because if there is a mistake or even worse, fraud on your taxes, you're the one who's on the hook with the feds no matter who did your paperwork. Josie Sturman, ABC 2 News.
All right, Josie. So we only file taxes once a year. So each spring we've had 12 full months to forget what we did the year before. So we're working for you right now with a list of the 6 tax deductions you'll want to remember before you file. First off, medical expenses. Let's talk about that. If the money you spent on health care last year amounts to more than 7.5% of your adjusted gross income, you can deduct that. Now, if you're a homeowner, don't forget about deducting your mortgage interest. You can also deduct the interest you pay on student loans. And don't leave out charitable deductions like clothing. If you've been out of work but looking for a job, you can deduct expenses like resumes, postage, job counseling. And if they add up to more than 2% of your adjusted gross income and then loan someone money, but you never got paid back, you could qualify for a non-business bad debt tax deduction.